Welcome to the
Welcome,
presentation.
Geoff.
So,
Welcome, Geoff. We have Geoff Atkins on the line with us, and that was a hello over there from Geoff. Geoff, of course, is from Vital Metals. Vital Metals is targeting rare earths production from its Nechalacho project in the Northwest Territories in Canada by the end of 2020. Nechalacho hosts one of the highest grade light rare earth deposits in the world, and it has the potential for a startup operation exploiting high-grade, easily accessible mineralization near the surface. You just heard from Geoff Atkins, who introduced himself briefly there. He is the managing director of Vital. He's a civil engineer with more than 20 years of project and corporate development experience across commercial, industrial, mining, and infrastructure sectors. He has been responsible for driving projects from concept through feasibility and development to operational assets. Previously, Geoff was the corporate planning manager at Linus Corporation, where he oversaw development and implementation of the corporate strategic planning process. Over to you, Geoff, with your presentation.
thank you, and welcome everybody. As said, I'll just give a quick run through on the project, or on Vital Metals. I'll provide an overview of who we are, where we've come from, and I'll put some specific focus on what our development strategy is, and before going into the specific projects. So very quickly, run through, obviously have the usual disclaimer. The highlights, I guess, from Vital Metals are that, and we see that we have a bit of a differentiator in the other rare earth companies out there. The first thing is that our management team has a lot of experience specifically in rare earths, not just in the development of them, but also in the operation. We have the rights to 2 projects, the Nechalacho project in Canada and then Wigu Hill in Tanzania. The North T-zone in Nechalacho is an incredible little deposit, very high grade, and very unique mineralization. And that mineralization enables us to apply very simple metallurgy with it. The other thing is that a lot of money has been spent on this project over time by Avalon, with over about $120 million spent on it. So we're able to leverage off that and all of that inbuilt knowledge there, coupled with our own expertise, to be able to bring this project into operation in the shortest possible time frame. And our goal is to be able to be an independent supplier of clean, mixed rare earth feedstock outside of China. In terms of the company itself, board of directors, with myself there, and then the capital structure, as you see, market cap at the moment is about 20 million, about 2 billion shares on issue, plus ongoing performance rights as part of the Cheetah acquisition. I touched on before about our senior management, and I think this is a real differentiator of Vital compared to a lot of other companies. I started at Linus in 2007. I was responsible for corporate strategic planning, getting projects up and running at Mount Weld, and also Malaysia, working on their Malawi project, but also assessing and analysing other projects around the world. And it was from there that really Cheetah was born, and then leading into Vital. Joined by Tony Hadley, Chief Operating Officer. Tony started at Linus in about 2005, I think, and he was responsible for developing the process flow sheet at Mount Weld, feasibility studies through construction, commissioning, operation. He then left and joined Northern Minerals, where he was heavily involved in the Browns Range project, once again going through feasibility operations with that project. Matthew Edler, responsible for our project development. Matthew worked with Linus as well on the Malawi project. He has an incredible amount of experience in delivering these types of projects around the world. And then we also have Darren Sutton as our metallurgist. Darren worked at Linus in the days of debottlenecking and during the commissioning and ramp-up phase of the Advanced Materials project in Malaysia, before moving on to Hastings, where he worked on their feasibility study. So we've got a lot of experience specifically related to rare earths. And what that experience has led us to, and it really led us to developing a strategy for how we felt we could develop rare earth projects successfully. And going through a little bit of it, I'd like to just go through a little bit of a timeline of how that actually occurred. So the team and I, we basically started at Lynas before the big boom. We went through the whole construction process with them. And then looking at the issues around commissioning. And we were able to take stock of what we'd learned through that process. And over a number of years, over a number of years, we're able to fine-tune a strategy for how we felt rare earth projects could be delivered. And that's really going on the lessons that we'd learned. And that led in about 2015, 2016 with myself and Jamie Henderson from Transocean Group sitting down and really looking at how we could establish a company to take advantage of what we'd learned. And in 2017, a company by the name of Cheetah Resources was born. We started that in 2017 because assessing the market, we felt that there was an opportunity which was going to arise in rare earths in about 2020, 2021. But it meant that we had, due to the time frame it takes in getting projects up and running, we knew we had to start right then. So after incorporation, Cheetah acquired the rights to the Wigu Hill project in Tanzania in late 2017, 18, and then the surface rights at Nechalacho off Avalon, beginning of 2019. Vital then acquired Cheetah with that being finished at the end of 2019. And that's really where we are today. Key question really is why rare earths? And I'll move through this bit reasonably quickly because there's a lot of information out there in the market. But primarily, we're in a world today where the key growth industries are all around energy efficiency. And critical to those are rare earths. And that places rare earths at a unique possibility, or a unique position, particularly in the current environment. We're also in a situation where what that means is that we have a real key driver in terms of the success of rare earths, and that is neodymium praseodymium market. And what we've found over the last few years and moving into the future is that the world is heading into a deficit in supply. And that supply does need to be filled. So we see that Vital has a unique opportunity to really fill that supply-demand dynamic. The critical thing, though, is to be able to move quickly and to have the flexibility to adjust to different market environments. And what we've seen today is a perfect example of that. The second thing which has happened is that rare earths have become a real focus from a strategic perspective. We've seen trade agreements discussed all around rare earths. The Canada and the US have signed a specific agreement and a plan on critical minerals and how they can collaborate. And that means that as we come out of COVID-19 and we start looking at what industries should be accelerated, what you'll find is these critical minerals will be front and center of all of those conversations. So it's important for companies such as ours to be at the forefront of those conversations. In terms of looking at how we were able to take advantage of that situation and look at where you position yourself and what products you produce. I showed you slides before which showed that rare earths are heading into a deficit, particularly in those critical minerals. But when you look at the amount of capacity which there is in the world for separation facilities, it's clear that the deficit is not in the ability to separate the products. The deficit is actually in the feedstock, it's in the mines. So that's really where we're focusing, and we're focusing our efforts. And that's, I think, one of the things we learned from Lynas as well was that the complexity of building a full separation plant and operating that can't be underestimated. And trying to do that from a start is a really big ask. When mentioned before that over a number of years, the team and I spent quite a bit of time working through and assessing what an alternate strategy would be to deliver a rare earth project and to develop a rare earth project. And when we looked at it, the key problem was which we discovered and which we felt when you review the performance of other projects, is that the length of time it takes for a rare earth project, once you finish a feasibility study and you start your financing, construction, commissioning, and customer acceptance. Realistically, what we've found is that you're looking at 8+ years from the time that you're looking at actually starting that construction works until you receive a return. So if you're then at a stage where you're looking at building a big project, and when you look at other projects out there, it's remarkable how a lot of projects, they're developed by juniors, and juniors necessarily means a small market cap. So if you're then looking at trying to fund a project which has a capex of maybe 10 times your market cap, you're going to have a lot of dilution. If you then add in that you're not going to get a return for that for maybe 8 years, then you really have a situation where the shareholder returns are difficult to achieve. And the reason why it takes that 8 years is that because the projects are very complex, your ramp up profile, it might take you 4 years to actually finance it, engineer it, build it. Because it's complex, you're still then going to have another 2 to 3 years for commissioning and ramp up. But because you're producing a very specialist product, those customers accepting that product are also going to have an extended period of time before they actually fully accept it. And what you find, that's where you end up with about an 8-year process. So what we felt was that to be successful as a company, and for us, success means that we maximize our shareholders' returns, we had to look and identify a new strategy. And what we really focused on was 2 things. To achieve shareholder returns, you need to reduce your capex. You can't have a capex which is multiples of your market cap. And the second thing is time to market. So the critical aspects there were, how can you get a product, how can you easily finance a project which can get into operation within a couple of years? If you can do that, and then you focus on expanding through operational cash flow, dilution is reduced, shareholder returns can be maximized. And that's really the focus of our approach and our strategy. And so from that, once we had this strategy, we then worked through what projects we could deliver. The next thing we need to make sure of with rare earths is rare earths are a critical product in any green tech. Therefore, the supply chain must be clean. And we must take responsibility for our waste. The days of being able to export waste are, I believe, over. And this is the reason why our focus is going to be on delivering a clean mixed rare earth product. So we will take responsibility and manage our waste. So we will sell to our customers a nice clean product and make sure that the supply chain itself is as clean as possible. So that's the basic strategy which we developed. And I'll run very quickly through our projects. I won't go into too much detail here. I'll leave that if there's any questions, if there's any specific questions there. But there are a few key takeaways I'd like to touch on. Our initial focus is going to be the Nechalacho project. Now, Nechalacho is located on Thor Lake, the Great Slave Lake in the Northwest Territories in Canada. As I say, we purchased it's about the top 100 meters of Nechalacho from Avalon. Important thing here is we are fully permitted to commence and to undertake mining and commence construction operations. So for us now, it's a matter of timing. It's in Canada. It's a well understood jurisdiction. The other thing is, which is remarkable, is that for our project, we have received an incredible amount of support from our local communities. We've received letters of support from the Yellowknife First Nation, or Yellowknife Dene First Nation, North Slave Métis Alliance, and Dananquay First Nation, as well as the City of Yellowknife and Town of Hay River. And that's a remarkable level of support for a mining project. And that's something which we're extremely proud of, and we don't take lightly. What it also means is that there is a great desire in the local community to see us succeed. The next thing about the Nechalacho project is, while it may be located in the Northwest Territories and in a reasonably remote location, the infrastructure we have available is actually quite, it's incredible. And if it wasn't for this infrastructure, we would not be able to bring this project into operation as quickly and as cheaply as what we hope. As I mentioned before, we're located basically on the Great Slave Lake. And what that means is we have access to full commercial barging operations in summer and ice roads in winter. We did a trial run on the ice road this winter and it worked brilliantly. We also, from the barge, commercial barges operate down to Hay River, which has direct access to the Canadian National Railway. On site, we have a 40-person camp, which we intend to use for our operations. So we don't have that expense of enabling works. Project itself split into two. Our focus initially is the North T-zone. That is going to be the initial focus of our operation. It's a very high grade resource, around about 9%, but more importantly, the mineralization is such that concentration is very simple. It literally is a case of separating red from white. Obviously very high grades, but I'll go through that. Because the metallurgy is very simple, processing, the test work we've undertaken, from a single pass from an ore sorter, we achieved a 40% concentrate. Likewise, first go at shaking tables with undersize, we also achieved a 40% concentrate. Now that's as high grades concentrate as anywhere in the world. The mineralogy is a bastnasite, well understood. And the test work we undertook there was achieving well over 90% recoveries to the liquor. This simple metallurgy, coupled with very high recoveries and high grades, it really is a key to being able to achieve a low cost operation. Second thing, that's from an OpEx perspective. The second thing is, with a simple ore sorter, the amount of infrastructure we require on site and capital costs on site are able to be reduced. It is a very simple operation. We don't require tailings dams. We don't require processed water. We don't require reagents. So it's a very simple, low impact operation on site. And that's one of the things which really helped us achieve such a high level of support from the local communities. The timeframes which we're targeting are that we're targeting production commencing in 2021. This will mean mobilising a mining fleet to site in February, with the commencement of mining operations in April, May. With sorting operations to follow and cracking and leaching operations as well. This is an aggressive timeframe, but we are well advanced in achieving this. As we previously announced, we have our ore sorter on order, and that is on schedule to be delivered to Yellowknife in the third quarter of this year. So we're in a very good position to achieve this. We have signed an MOU with Nahani for the mining contract. So whilst we are working through and finalising the actual pit designs, we will finalise those contracts. So from a project perspective, we are well advanced on achieving these schedules. The second project which we have rights to is Wigu Hill in Tanzania. I won't go into Wigu Hill in a huge amount of detail, but Wigu Hill will be the second focus. One of the things which we believe is really quite critical is, if we are to expand our production in a year-on-year basis, it is very important to have this second project coming online. The Wigu Hill project is located near Kisaki in Tanzania. To date, we've purchased the rights off Montero. We're well advanced in discussions with the Tanzanian government about having a mining license issued for this project. To date, the hill itself is only 2 out of the 10 known targets have been drilled. So there is quite a bit of work to go and a huge amount of potential. The initial focus for us will be one of these 2 zones, which is called the Twigger zone. That is a discrete, similar to Nechalacho, which has this discrete zone, which is perfect for starting. Similarly, with Wigu Hill, Twigger is a similar zone for us to target initially. And then we can look at other areas moving forward. Critically, with Wigu Hill, there are a lot of similarities in the ore body at Wigu Hill to what there is at Nechalacho. Central to this is very large grains, discrete crystals of bastnäsite. This means that we are going to be able to leverage off the work we do at Nechalacho to help bring the Wigu Hill project forward. Likewise, there is excellent infrastructure here. It is very close to the Tazara railway line, which runs from Zambia through to the Dar es Salaam port, with access to power and water as well. That's all I'm really going to go through on the projects. And in terms of the conclusions, I personally believe that we're on track to be in operation next year. We have a market cap of about $18–20 million, which, based on our performance, I would hope is vastly below, well, it is vastly below what our peer group is. We have high-grade resources, which we're able to target initially before expanding into the larger secondary zones. And we have an outstanding management team. I would place the experience of our management team head-to-head with any company out there in the world. And that brings us to the end of this presentation. And I would ask if there are any questions.
Thanks, Geoff. There's been a fair bit of interest for your Nechalacho project and a few questions around that one. The main one we'd like to ask you today, though, is, in the interest of time, what's the estimated CapEx for that project and how do you plan on funding it?
So we're currently working through the engineering studies to be able to release capital costs. We're not in a position to do that as yet, but in terms of funding, we're working through a number of programs at the moment. One of the key ones, as mentioned before, there's a lot of interest in the critical mineral strategy between Canada and the US. People would have seen that Lynas has recently been awarded a tender for constructing a heavy rare earth separation facility for the engineering of that. And there's a large amount of interest from various governments to provide assistance for the project. So we're undertaking a process at the moment of understanding exactly what the impact is of that and then how that interacts in terms of a whole funding package.
Mm-hmm. If you can say just quickly, how much are you selling the ore for and who to? That's a question that's just come in.
We are still working through those supply contracts, but if I would just move up. We're not looking at selling ore. What we're looking at selling is a mixed rare earth carbonate or oxide product. And that we're looking at the separation facilities around the world. So the specific pricing will be based on the negotiations which we have with those facilities. There are well understood markets out there, and typically the rare earth contracts are based on either market prices or on specific negotiations. But as I said, there's a lot of capacity out there amongst separation facilities for rare earths, rare earth carbonates.
Well, thanks, Geoff. Thanks for joining us today.
My pleasure.
That was Geoff Atkins from Vital Metals. Up next, we have West African Resources, which is West Africa's newest gold producer. Stay tuned, buzz back in a couple of minutes' time, and they'll be on the call shortly.